In crypto, most of our attention goes to the big flashy things, such as tiny valued altcoin and then selling at an absurd X. Now, this is something that is very attractive for obvious reasons, but we're in a bear market and there are some things that you can do to actually increase your wealth during the bear market and take advantage of this period of relative sideways trading in the crypto market. Now, this is something that I do and it can generate me tens of thousands of dollars, and it's a pretty good strategy from what I've found so far. At the end of the day, we want to have as many tokens as possible when we get to the peak of next bull run. And this is exactly what this video is about, getting 10% more tokens, 5% more tokens on your favorite altcoin by timing the dips and the peaks. So the point of this video is that people shouldn't be afraid of tethering up. Tethering up is basically when you take your tokens and turn it into USDT or USDC or whatever. The advantage of tethering up means that you can sell when you think things are a little bit too hot and then buy back in a few days or a few weeks later when you think another upturn is imminent. Now, this is something that requires a bit more skill. It is true that you can actually lose money doing this. You should be able to make a few more tokens during this bear market so that when the bull market comes, you'll actually have even more money. So if you look at the crypto markets, you can see that in the last 7 days, pretty much everything has gone down by a bit over 10%. Bitcoin has gone down by 13%, 18% for Ethereum, 13% for BNB, and you get the idea, right? So the thing that comes to mind is, okay, well, what if we tethered up 7 days ago and we buy back in now? Well, now you would have 18% more tokens in Ethereum and 13% more Bitcoin, 13% more BNB, 10% more XRP, and so on. You get the idea, right? So this is pretty major. If you tether up at the right time and then buy back in, whatever happens to it after doesn't matter. You're doing better than someone that is simply holding. As I said, if you tethered up, you'd have 18% more Ethereum in your portfolio. Whatever happens now, like that's secured, right? And this is what I've been doing through the bear market, where I basically tether up when I think things are a little too hot, with the full intention of buying back in at a slightly lower price. That could be even as low as 5% lower. And that is still a major gain. 5% more tokens, that's brilliant, right? One of the most reliable ways to actually tether up at the right time, from what I found, is by using the market cipher indicator. And this is what I use, this is what CryptoFace uses. A lot of big traditional finance guys use market cipher. The way I like to do this tethering up strategy is on the 4-hour chart. I'm just gonna take you through, my thought process of how I come to the conclusion of when I should tether up on a bag that I'm holding. So this is the 4-hour cake chart, and I've spoken about cake on this channel before, and I do think that it's at least going to 20x come the peak of the next bull run. I think that's pretty safe. But going over the basic market cipher strategy, I'm gonna really go over this quickly, and I hope you guys understand this, but it can be a bit theoretical. First of all, there's this green wave here, then it goes into a red wave, and this is how it works. The red wave means there's sell volume, and the green wave means it's buy volume. To put it in simple terms, we want to sell when it's green and buy when it's red. On top of that, we also want to look for anchor and trigger waves. When we see one of these momentum waves print a red dot that is high above this line here, it then prints another red dot. That is an anchor, and this is a trigger wave. And this means it's probably a good time to look to get into a sell. Another thing is that when this green wave starts to curve down, that is a good time to sell also. Another thing is that if you look at these indicators up here on the actual candles and wicks, you can see that there's a red diamond and a red X. That's another confirmation that it's time to sell. So I'm just going to go over the last time I tethered up. So what I was looking for an anchor wave and a trigger wave, which is here. So that's an anchor and trigger wave. I was also looking for the green wave to start curving downwards, and that's what happened. And I looked up here, there's a red diamond and a red X. That means a dump is imminent. So I waited for that to confirm, and round about here, which was about $4.32. That is when I tethered up my cake tokens. And then I bought back down here at one of these green dots. So basically I now have over 10% more cake tokens. Now whatever happens after the fact, I'm not really going to stress about it because I've already secured that I now have 10% more cake tokens compared to someone that just held. The green wave turned into the red wave and green dots started to print, which means it's time to buy back in. So that's when I got my cake tokens, and I got about 10% more cake tokens. Had I waited a bit longer, I could have got even more, like about over 20% more cake tokens, but it doesn't really matter. Now, you may be wondering, okay, well, how consistent is this strategy? Is this actually consistent to any degree? Like, what is the variance here? If you want to know if a strategy works, you should always backtest it. That means looking at what printed on the chart before and then testing your strategy out in the past. So if you would have taken what I just said, what I explained there, and applied it to a chart in the past, let's see if it works. Does this theory hold up? Let's go back, I don't know, let's go back like a month ago. Okay, now this is pretty wild. Like, this was like the major crash, so let's not count that. That's a bit too extreme. Okay, I think this looks quite similar. So as you can see here, trigger wave, check. Green wave starting to curve down a bit. Okay, what's going on up here? Red X. So you could maybe tether up your Solana around here, this point here, which is $246, and then the earliest you would buy back in would be this green dot here, because it's slightly in the red, but it's not ideal. But even then, that's about $227. So like what? That's like a 5%. So you're getting like 5% more Solana tokens if you do that. And that's really cutting it quite early. You could have waited until it was more red and potentially bought back here because there's a anchor and trigger wave but bullish, and you could have bought back in at like $213. You now have even more Solana tokens. So okay, that's two examples. Let's look at some more. Let's go back in the past again. Okay, this looks pretty good. Bearish anchor and trigger wave confirmed. Green wave is curving downwards. The red X prints here. Now this would probably be a good time to tether up. So what is that? That's $178. If we would have bought back here, which is still pretty early, you would have got in at $157. I mean, that is roughly 14% more tokens just doing that. You know what I'm saying? Like, so that's 3 out of 3. That's 3 examples. If you don't believe this is like consistent, buy the indicator yourself. It's really consistent, especially on the 4-hour chart from what I've seen. If you want to get Market Cypher as an indicator and use the strategy yourself, like what I use and CryptoFace and other big guys in crypto use for accumulating more tokens and trading, you can get the Market Cypher indicator in the link in the description below. I think this is extremely worthwhile in the bear market. You know, depending on your portfolio size, if you finish the bull market with even just 10% more tokens, you're probably paying for this indicator multiple times over. So like, even if this works just once, you really are making more money in the long run, and your crypto stack just gets bigger and bigger, just simply tethering up when things get a bit too hot. So yeah guys, if you enjoyed this video, please drop a like and subscribe for more videos like this.